with the latest on the corporate front, all the market trends, expert opinion, and sound business advice. It is your unique window into the business world, direct from the heart of China.
Hello and welcome to Biz Today. I'm Zhao Yang in Beijing. China's economy managed to withstand the external pressures and maintain steady growth in April. The latest data shows that the value-added industrial output grew by 6.1%, while retail sales expanded 5.1%, and exports increased by 9.3% in yuan terms. And China has recently cut its benchmark lending rates for the first time since October last year. Meanwhile, a law designed to boost China's private sector has taken effect. So what is the current state of China's economy under the global trade tension sparked by Trump's tariff policies? And what policy tools does China have to deal with the future economic uncertainty? Where can China find new growth opportunities? For more on this, join us on the line now are Lun Li, Assistant Professor of Economics, Peking University, Professor Qu Qiang, Fellow of Belt and Road Research Center at Minzu University of China, and also Yan Liang, Professor of Economics, Willamette University. So I will start with you. What does the April economic data on industry, services, retail, and fixed assets tell us about China's economic picture?
Well, I think all these numbers show that China's economy remains stable and resilient despite the tariff war. As you remember that by April the 2nd, many of these the U.S. tariff rates on China have been hiked. It's not until early May, that some of these tariffs rates were rolled back by the United States after the Geneva talk between the two sides. So April was the month where the economy were affected in a way, sort of negative way, by this tariff. That said, as you mentioned, some of these very solid growth in terms of the industrial output that grew by 6.1%, retail sales up by 5.1%, and fixed asset investment has gone up by 4%. So all of this just indicate that the economy held up quite well, despite all these concerns about the export restrictions or the reduction in exports. In fact, exports gone up, as you also mentioned, by over 9% in the yuan's value. So that just shows that even though the tariff could have an impact on the Chinese economy, based on the domestic markets, based on its continuous, industrial upgrading and advanced manufacturing capacity improvements, and also export sector growth, not to the United States. We know the export to the United States has gone down by 21% in April, but it was more than make up for by the increase in exports to the ASEAN countries, which grew up by 20.8%. So what that just shows, both the internal circulation and also external circulation have actually helped to hold up the Chinese economy despite the tariff headwinds. And I think that now that the tariff rate was rolled back and there was a 90 days pause, I think that will continue to help out with the economy. But policymakers, of course, are remaining vigilant. We just had a monetary easing with rate cuts by 10 basis points for both 1-year lending, but also 5-year lending rates. So I think all of these just show that the policymakers remain vigilant to use policies to help to boost the economy if any negative shocks from outside of the economy may hurt the economy in some negative ways.
And Professor Qu Qiang, so what impact does the U.S. tariffs really have on China's economy? And we see that the export increased by over 9% in yuan's term last month. So how do you explain China's exports resilience against the U.S. tariffs?
Well, I think a U.S. tariff towards Chinese, export industry actually, and a certain of the manufacturing industry, does create some pressures because, if you take a look at the previous plan, they're going to raise up the tariff about 145%, and even though right now is so-called 30%, but actually, still, if you take a look at the structural tools on the Chinese products, especially the 301 investigation tariff, are still not quite removed, and also the parcel under the $800, the small parcels into the American border, are still being charged with 54% of the tax. So if you add up all this, I think the profit and also the job market will definitely be affected. But of course, this 30% is much lower than 145%. 5, and this is a beginning and it's a start. But I don't think China really, can, not survive this kind of the crisis. Actually, when the tariff conflict was at the prime, moment, we send up some investigation teams to major Chinese export sites like Yiwu, like Wenzhou, and also like in Guangzhou. And we did a lot of survey, and what they're telling us is that actually, well, not a good news, but not a bad news as well, because many of the exporters they're telling us, well, they can do several things. Number one is they can, optimize their supply chain, so they can squeeze out some extra circle, and so to make sure that the impact towards the whole supply chain is not that big. And also, I think secondly, it's very important because a lot of people probably don't understand that is Chinese product will have very unique value in American market, which is what I call the performance versus price ratio. So American importers find out, after this conflict, they find out, well, if you want the quality and also you want the similar, very compatible price, it's very hard to find a substitute. For example, you can find some cheap substitute in South Asia, but the quality is very, very not satisfying. Well, if you want to find some high quality product to supply to replace Chinese product, the price will be not only one time, but maybe several times more expensive than Chinese product. So after viewing this, they try to, share this burden of the tariff together with Chinese partners. So basically, it's half and half. So this is another very important thing. And also, thirdly, China has been working very positively towards the diversification of overseas market. Not now. I mean, ever since the 2019, Chinese government has already been starting to do so. So right now, America's actually trade ranking is actually only number 3 with China, and ASEAN nations, Latin America, Africa right now has been soaring up very, very quickly with the trade in China. So I think that's the reason why, quantity-wise, Chinese products are very, very, very resilient towards this tariff conflict, and letting alone there is a growing, high value-added products part in Chinese export. That is the high-tech products like the EV, like the AI-related products, semiconductors, robots, and aviation products like the drones. So these are basically not replaceable in any given market. Well, for example, Chinese drones. If you want to find the great quality and also very reasonable priced one like Chinese ones, basically impossible. So I think that's the reason why China are so competitive and have a very important card to play among this bargain.
And yeah, some people say that the global trade patterns are set to change. So what do you think might the new global trade order look like in the near future? And where can China find new growth opportunities in this new order?
Well, I think that's a great question. I think if anything, this tariff war has shown that the United States has not been a reliable trading partner, and the US is determined to, in a way, uproot the current multilateral trading system. As you saw that Donald Trump basically wanted to have bilateral agreements with each of the trading partners rather than go through the multilateral platform. So I think for countries in the world, they are looking at trying to make new trading partners and trying to diversify their trading destinations, their trading partners. I think China has been taking a lead role. I think in any, if in sort of any positive sense, I think Donald Trump's sort of tariff war basically accelerated the process where countries would try to foster more mutually beneficial, more reliable trading relationships with each other, bypassing the United States. I think so far the U.S. is only able to have the so-called the tariff framework, trade framework, not really a trade agreement with China and the Great Britain. Even though Donald Trump has been voting that they're going to make 200 trade deals, so far we haven't seen any coming out of these pause, except for the two countries that I just mentioned. And I think for China and many other countries in the world, they are trying to, build more relationships with each other. As you saw that, the acceleration of the RCEP in the ASEAN +3 countries. China also just met with 3 countries from Latin American countries and held a select forum in Beijing where many deals were signed. China pledged $9 billion of credit to help to develop Latin American countries, and they signed many trade deals as well. Of course, China has very strong footprint in Africa. Basically, out of the 54 African countries, China is the largest trading partners with 52 African countries. So as you can see, I think, also with BRICS, right, that they're also going to enlarge the trade among themselves, but also help to improve their clearing system, their trade payment system. So all of these, I think it's clear that there is the new momentum that is being built up despite, Washington's sabotage of the current trading system. I think countries will work together in a cooperative and effective way and try to promote mutually beneficial and mutually equal kinds of trading relationships among themselves. And so I think that is actually the silver lining, right? It's actually the positive sort of the benefits that came out of this very unprecedented, very chaotic trade war.
And this is China's foreign trade or exports. So Li Lun, actually in April, we've seen the value-added industrial output grow by 6.1%. And the output of 3D printing devices, industrial robots, and new energy vehicles grew by around 60%, 50%, and 39% respectively. So what does this tell us about China's manufacturing sector?
Yeah, so I think China is, through these statistics, we're seeing that China is rapidly upgrading its manufacturing sector towards a high-tech and greener production. So this really aligns with, China's plan and also the strategy for dual circulation. So basically, while boosting domestic consumption through these, innovative and unique products, we're also moving up the value chain. So we're seeing, for example, in industrial robots, a more than 50% growth. And these numbers are signaling a shift towards a more automated, a more digital future. And similar to, what EV has gone through in the past several years. So basically, these new or innovative sector will undergo a period of relatively high-speed growth, but relatively not so visible for the common consumer, but gradually as they become as the products has become cheaper and more affordable, they will gradually move into the consumers.
And Professor Qu Qiang, actually, I want to give an example. The CATL, the Chinese battery manufacturer, it has seen the world's biggest IPO listing so far this year, and it raised $4.6 billion on its first day of trading in Hong Kong. So why is there still so big confidence among international investors for leading Chinese manufacturers?
About the CATL, I think I don't need to waste any other words to introduce about this company. In Chinese Asia market, I would call it the cattle king, because it's the king of the lithium battery industry, and by any definition, it is the king, and it does deserve this kind of the title. So I think with the EV industry rising up so quickly, and CATL actually are developing really, really fast. Even Tesla, even many, famous European brand like Stellantis, they're using the CATL's products. So very competitive. They have the latest technology. They have very effective running, and also they have a very wide international operation. And also their sources and the customer network are very, very wide. So I think going into the Hong Kong, get listed in there, and it's a very important step for their international strategy. So it can help them to raise lots of the funds for further R&D and also expansion for the capacity, and also raise up their, the whole, position further in the international battery market. So I think I think the response from the whole market actually shows that investors are very confident for its future. And I think the reason why they chose Hong Kong is that Hong Kong actually recently been furthermore supported by the central government, and also we have such a close linkage with the mainland industry, mainland financial network. So it's actually easier to travel all kinds of resources between the mainland and Hong Kong. Instead of just get listed in the United States or get listed in some other market like Singapore or Japan. So I think Hong Kong is absolutely very important, for them to reach out to Asian market, to international market, and also considering CATL is speeding up its operation and presence in Europe. For example, they've been building the factories in Hungary, in Germany, and also in other Western Europe countries. So I think they will have a very strong demand of overseas renminbi and US dollar operations, and also they will need a place for the open account in the capital account, so they will have an easier condition to run their international businesses. I think that's the reason why they choose to get listed in Hong Kong, and eventually great news for the overseas Chinese assets investors, because this is the real deal cash cattle that they can dream for.
And also, Professor Qu Qiang, China has taken a series of policies to support its economy. For example, China has recently cut its benchmark lending rates for the first time in 7 months. So what does it mean for businesses and individuals? And is that what investors were waiting for?
Yes, I do think so. Currently, I think the whole world are facing a lot of pressures. If you take a look at the market, not only in America, in China, and also in European Union, even in Japan, the stock market has been rising for like several months consecutively, but their T-bond market and also United States T-bond market are facing lots of pressures. That it shows up the panicking mood, the sentiment, this is sentiment or spreading because of the international turbulence. So I think against such a macro backdrop, China needs to support further about its real economy. So I think we have basically two kinds of policy. Number one, what we call the overall policies. So lowering the LPR is basically this kind of the policy. So by lowering the IPR and the triple R, we can inject immediately about trillions of renminbi into our economy. So everybody will get this part of the money. So liquidity crunch will be solved to support the whole bond market. And also we will have some what we call the structural tools or targeted tools towards certain important prioritized area. For example, like the agriculture industry, like the SME, like the startup with high tech, and also those industries been supported by the national policies. So we will have more than 25 BPs a cut in the rate. So it's even further than the LPR rate cut. So I think these are showing the determination and the policy direction for Chinese, monetary authority. That is, we're going to support everybody and also put special special attention on those key areas by giving them more of the targeted liquidities. So I think by doing so, we will support them. But of course, monetary policy is just one part of it. We have fiscal policies, that is by the Ministry of Finance, to providing more of the special bond, and to support the housing market, support the technology companies to to issue the bond on the market. And also we will have some industrial policy to support the growth of certain industries and also certain companies to develop the technology. So I think all these policy combo have been released very, very, densely in the past half a year, actually will form a network or a matrix of policy to support our further stabilization of economy and also the technology growth.
And Li Lun, so China's private economy promotional law has taken effect. So this is marking a milestone in the development of the country's private sector. So why do you think the government is introducing the law at this particular time?
Yeah, so I think the main reason is that we this is a crucial time to restore confidence in these private enterprises, both as a driver of innovation and also as a source of job creation. So we know that the private sector contributes to more than 60% of GDP and more than 80% of urban jobs in China. But previously it has faced, for example, financial constraint and somewhat unequal market access, and also in terms of policy, there's lots of uncertainty. This new law basically just give them equal legal status between the private and state-owned companies, basically addressing exactly these concerns and giving the confidence to investors and entrepreneurs that in the future they could continue in terms of investment in these companies. So why at this time? Because right now is a key moment of structural transformation. So China really needs its private sector to thrive and prosper in terms of high tech, in terms of services, in terms of these new industries.
And Yan, so talking about China's high-tech sector, do you think the U.S. want to decouple from China, especially in the high-tech sector, such as AI and chips? And do you think the world might be divided into two AI systems?
Well, I think it does seem to have the intention for the United States to have the so-called strategic decoupling. This is according to the Secretary of Treasury, Scott Bessent. I think, the U.S. at this point already find out that, a wholesale decoupling from China is probably not feasible, and it's also going to be very economically damaging. And that's why they roll back on this massive tariff on Chinese imports, right? They rolled it back from 45% to now 30%. Because they understand, with the very high tariff, you essentially decouple from China, and that is not going to be, feasible for the U.S. economy. But on the technological side, I think there is intention, right, giving their own strategy, quote unquote, strategic decoupling, or earlier in Biden administration, de-risking. I think they do seem to want to build some sort of firewall, keep China out from the U.S.'s technologies when it comes to AI, semiconductor. But I think, the strategy is very dubious because I think first of all, China has shown, even without the U.S.'s advanced chips, China can still develop models like DeepSeek, which is very highly competitive. And China is also doubling down on the investments in AI. And China has a lot of advantages, right? In terms of the capital, China has the big funds, which now pretty much garner, $80 billion to support the integrated circuit industry. China has a lot of talent, 1.4, million STEM graduates every year, which is 4 times the US's. And China has this very, comprehensive and very mature industrial production system that would allow for mass production and fabrication of chips and other, hardwares. And last but not least, I think there's also a very large user case in China to apply AI in the various industries and very quickly monetize and help to boost the AI diffusions. So all of these benefits, I think, would allow China to compete, with the U.S. Not to mention, I think for the rest of the world, if they are more willing to adopt China's technology, which again, China's technology has a lot of appeals, right? When it comes to cost effectiveness, when it comes to open sources. So in that sense, I think, by not cooperating with China, by seeing China as a, strategic rivalry, I think the U.S. misses out the chance or the opportunity to, collectively develop AI technologies with China. As a matter of fact, I think a lot of the, leading edge AI research papers mostly have Chinese co-authors. So I think it's a missed opportunity for US and China to work together and develop AI further for, the benefits of humankind. Not to mention, I think when it comes to AI governance, it really requires collective efforts on both sides.
Of course, as you mentioned, China will continue to forge ahead and develop its technological capacity regardless of what Washington does. So what do you think of China's potential in AI and chips?
Well, I think, China, of course, always hopes for the best and trying to cooperate with Washington, but prepare for the worst. But I think China does have a lot of advantages. When you think about AI, the development requires capital, and China, has just raised 3 rounds of so-called big fund to support the national integrated circuit industry. Not to mention, China also has established this national venture capital investment funds that would help to support, these technologies. And so capital is plentiful. China also has tremendous amount of talent. It graduates 1.4 million engineers and STEM students every year, which is 4 times the US's amount. China has also large amount of growing amounts of renewable energies, very cost effective. And that is very important to power the AI development and also uses, right? The interference, it's really energy intense. Also, China has, tremendous manufacturing capacity, which I think that really made China able to build this ecosystem from design, development to manufacture, to adoption and integration of AI technologies. When you see all the drones, all the industrial robots, they are able to produce at large scale at a low cost with AI technology integrated in it. And last but not the least, I think there's really huge user case because AI is, as I mentioned, cost effective, it's open source, so it can be very easily integrated in various sectors. So I think with all these user cases, it's very easy to build the network effect. And so to be, able to export these technologies to other countries to really foster the kinds of network effect. And I think that would really put China at a very advantageous position.
Well, we're speaking with Yan Liang, Professor of Economics, Willamette University, Lun Li from Peking University, and also Professor Qu Qiang from Minzu University of China. And that's all the time for this edition of Biz Today. To listen to this episode again or find more previous episodes, you can download our podcast by searching for Biz Today. I'm Zhao Yang in Beijing. Thank you so much for listening.